It's the 150th episode of Markets with Megan. I just want to thank everybody who's tuned in and listened to our regular economic updates and talking about the markets. Again, if you have any questions or comments on how we can improve the podcast, please feel free to reach out to podcast@verdence.com. But let's dig into what we got this morning, which was the Fed's preferred inflation indicator, and that is core PCE. What we saw this morning was good news. Inflation was up 0.1%, and that's what the expectation was for the inflation reading. But when you actually go down two decimal places, it's 0.08, which is the lowest month-over-month reading we've gotten for core PCE since November of 2020. So this is definitely good news for the Federal Reserve. This gives them it's a little bit of breathing room here. We came all the way from being up this year to in January of being up 0.5% on a month-over-month basis. So getting down to this almost unchanged on a month-over-month basis is what the Fed wants to see. Now, on a year-over-year basis, inflation is still rising 2.6%. It is a little bit better than last month's year-over-year reading, which was 2.8%. So we're getting closer to the Fed's 2% target. We still think September, while the odds of a rate cut in September have increased a lot with this data, we still think it's a little early to say September. You can remember that they have a dual mandate. It's inflation has to get down to their 2% target, and they've made it clear they don't have to wait until it's exactly hit 2%, but they also have to have maximum employment. And we're still seeing a labor market that's holding in there pretty well. We've seen some modest increase in the unemployment rate, but not anything where the Fed can say, okay, all is good, we can go ahead and cut interest rates. We still think this is an end of the year story for interest rate cuts, but we're watching the data just like the Federal Reserve, and we'll continue to monitor what's going on from not just the personal spending, but also manufacturing, some of these things that have been under pressure, to see if a September rate cut is more likely. That's all we have today and this week. We'll be back next week with a bunch of more economic data. Well, remember, it's a jobs week next week as well. It's also a shortened holiday week, but we will be back with some economic data for you. If you have any questions or comments, you know where to reach us. Thank you.